just to recap today, another day where I pretty much says exactly what's gonna happen. And why do I call the market or predict the market so well? Well, essentially, I follow fundamental and forward-looking analysis along with technicals analysis. And those three combinations, you know, if you look at the data correctly and analyze it correctly, you're gonna get it right most of the time. And if you're wrong, that's okay because you never can be able to predict exactly what happened. But like I said, 4,200 was the initial bounce target, and that happened exactly the way I said it was going to happen. It went down right to 4,200. Now, the first test is always going to be the strong bounce. So right there when it gapped down, and then undershoot the 4,200, and if you went long, which you should have, you're gonna make a lot of money because that's a very good squeeze all the way up to this technical line. So technical leverage still matters, and throughout the whole events of the last few days, you can see technical lines still matter in the intraday. The 5 minutes technical held up here or react off of here, and here you can see the 5 minutes holding reacting off of here. So if you didn't go long on this position, like I keep saying, there's a morning session, this is the morning session, and an afternoon session. And they're going to hit it in the afternoon because of zero day expiration, which is zero DTE, the option plays. And they went all the way, could have went to high of day, and I call high of days when it closed at the high of the day, like these candles right here, where it pretty much closed at the high of day. And I knew that wasn't going to happen. And the reason I knew that was going to happen because on the 60-minute candle, it hit the technical level. I hit close to 4,200. Here's the technical level on the NQ, and also the technical level on Apple failed. And also, I saw the options were pretty heavy on the puts. So the options on the puts were still pretty heavy. And there was some buying on the call options, right? But the put option outweighed the call option quite a bit. So the probability that it was going to go to high of day, which is closing at the high of the day, was almost, was very low, less than 50%. So at this point where it hit this technical level and overshoot it just a little bit, that's when I counteracted my bull trade and went, I like to carry, I like to sell options. So on the longs, I was long on Friday, like I said. Obviously, I was targeting this 15-minute, which I missed. So when it reversed, I was thinking whether I should bail out or hold on to it. I held on to it and cover at this point where it went up to 41.50. And the next point that I went long was this point, and I went short on this point with reverse options, meaning I sold a put option here and I sold a call option here. So I'm carrying a equal leg straddle, 50-50 call and 50-50 call puts, which are both positive for me at this point. Now, my analysis over the weekend, if you look at it, I was saying how today was going to be technical Monday. And obviously it played pretty technical. Everything was pretty technical. And I knew that was going to be a good trading day because here is technical, technical here, closing right here. I mean, even on the XLF was technical, right? The SMM. And also on my analysis for the weekend, I said the reason why the indexes sold off and the Qs were strong was because there was Jamie Dimon selling his 1 million shares of JP Morgan, and that pretty much tanked the XLF, right? this tanked the XLF. Well, they reversed it, right? Because it was not a industry event like Silicon Valley Bank that caused that whole fiasco, right? This was a selling kind of thing, and they reversed it. Over the weekend, there was nothing catastrophic happening over the weekend, so they reversed it. Now I was hoping for a gap down today. It didn't happen. That's okay. You can never predict it correctly. Um, and you adjust accordingly. Of course, it gapped up, shot straight up. Um, Targeted, of course, was the 15 minute. Didn't hit the 15 minute, but that's okay because along the way, it still behaved technically, right? And you can see the MACD started coming in technically, right? Over the previous videos, I was saying how the MACD was broken on the 60 minutes. You can't really count on the MACD when it's broken. Well, it started to gain traction. Now it's starting to behave technically. And guess what? It's now starting to reverse the other way on the MACD, the way I see it. So that's very clear that it didn't end high of day. And the reason why it didn't end high of day, like I said, the options were heavy on the puts, right? It's heavy on the puts, not as strong. I mean, strong on the calls, but not strong. And the other thing was it hit technical level, reversed, but also forward-looking analysis. What I do on forward-looking analysis, I look at the economic data that's coming, right? So today there was no economic data. I knew since there was no economic data, therefore it's going to be technical Monday. What's going to happen this week? Like I said over the weekend, right? Tuesday, this is going to be important. The thing was, I was predicting over the weekend how these numbers were going to be negative for the stock market because of the monthly chart, right? If you look at the monthly chart, I was thinking, well, a lot of times they do react off of the 20-month moving average. You can see at this point there's some reaction. It closed low of the month, right? And even here, low of the month on the 50-month moving average. Well, here's this midline for this upper band that now has shown support. So now there's a little doji, right? The monthly is still going, the monthly MACD is still going down. So it's still a very strong negative negative bias, bearish bias, right? So this level is close to the 20-month moving average for a 1-day bounce. But this is going to control the data. Will it continue to bounce up higher or continue to bounce or retrace back below this and maybe even the next test? I say first test is always going to be um, right, the first test of a significant level, like right here, like I said, it's gonna be the bounce. But the next test, if you go long here, you're gonna get this pain, right? The second test is always, well, not always, but a lot of times it's gonna be fail. Obviously, if you look at the intraday, it held up, right? Intradays are different, meaning this 5 minutes, it's not like as strong as this 15 minutes or as a technical level. So the second test of this technical level went all the way down to this next level, which is 4100, which I said was the bounce. And I knew it was going to be a bounce, and I weighted my play on the bullish side. But now we're sitting right at a technical level on the 15 minutes, right? So we're sitting at we failed this key level here. So is this now going to be the next test is going to be toward the lower side or the bearish side? Very well can be. However, this data will either facilitate that bias or counter reverse it. And I said over the weekend, I'm thinking these these employment data are going to be bearish. And I don't know if I'm right or not, right? Because it is trending downward. It is trending downward. But that doesn't mean it's going to be continuing down, right? It can still, there is no forecast on these data, okay? The consumer confidence has a forecast that came in, and it's going to be on the negative side. So already, like I said on the previous video, I'm thinking the consumer confidence is going to be on the negative end, and that is bearish. All right, consumer confidence spending is up. Right, the previous data says consumer spending is up, personal spending is up. But if their confidence is low, that's negative for the stock market. Okay, let's look at the consumer confidence. Um, but in the meantime, these employment data, they are sticky, and that's why they say inflation is very sticky, especially employment data. People, they call them pay grade, right? You're stuck in a pay grade, and these benefits, especially the cost, the health insurance and all that, it can cost quite a bit, right? So the consumer confidence is trending downward, and so I am expecting this consumer confidence uh, to continue to trend downward. So overall, it does look like it's still a very bearish condition. Intraday, anything can happen, right? Intraday or day to day, anything can happen. However, right now, I am, I don't tend to carry, I tend to be very risk averse, right? Meaning I do risk reward management. So even though I am negative, I'm carrying a 50-50 straddle, right? Selling a equal number of contracts of calls and puts, but my disposition is toward the negative end, meaning I'm bearish for tomorrow, Tuesday. And that is because I am thinking these data are going to pretty much be a negative bias for the stock market. And even if they're not, even if it gaps up, pretty soon you're going to get the housing data coming in and you get the consumer confidence coming in. These are going to be catalysts for the negative side. So tomorrow is definitely going, well, not definitely, but I say definitely from my perspective, it's going to be bearish, right? Because I'm still thinking it's going to close. Tomorrow is the end of the month, okay? I don't know if there's anything expiring at the end of the month right now, but there probably is. And they may sell it off to get back to this technical level. This technical level held support only once, right? And that was on Friday. It held. Now it may come back down and test it. So let's see what the VIX. The VIX is down quite a bit. Technical level right here. So I mean, there's no reason why it can't go back up. Especially when there isn't any catalyst on the earnings front today, that I know of, that, I mean, not holidays. Let me look at the earnings real quick, right? So there isn't really any earnings. McDonald kind of beat. Let's pull up McDonald and see if there's anything. Pfizer is coming up, but McDonald, right? They beat. Okay, so that is a good number that came in today, but that's over with. So I don't think there's anything in the after hours. And tomorrow, I see tomorrow is Tuesday. You got Pfizer, AMD, and I don't know which one is before, which one is after hour. Maybe Caterpillar will be before the market. There's no reason why Caterpillar would beat, in my opinion, because Caterpillar has been on the negative side. So I don't think that's a a positive bias just because Caterpillar is going to report pre-market. Amgen, AMD, Pfizer most likely going to be after hours, and that's going to be negative as well because I'm thinking AMD and Pfizer are going to be a negative, and like I said, I'm negative for the initially what I call for the I'm still expecting this reaction off of Wednesday, right? So looking forward, I'm still expecting. So overall, even if I missed being negative for tomorrow, I'm still going to get this negative when Wednesday come. So that is something. Even if I miss, eventually I'm still gonna get it right because I just don't think the Bulls have the strength, or what Jerome Powell says is going to trigger. He's not going to reverse statement, right? It, Pretty much every time he has been speaking, the market has reacted negatively, and those shorts knows the longs or the bulls are weak, so it's going to happen. Like, even if there's an initial up, it's going to hit on the negative side. So whatever I hold on the bearish position will eventually pay off, even if I'm wrong tomorrow, which, you know, I don't think I'm going to be wrong tomorrow, but that is how I trade, and my philosophy, and why I've been able to call position so well is because of forward-looking reaction, forward-looking analysis, and focusing on fundamentals more than just technical lines. Right? Technical lines, it can be tricky because the technicals can be broken. Like I said, these technicals can get broken right here, right? But then it goes back in line. So yeah, I'm still holding on to my analysis over the weekend, what I state for the entire week, and just a short video today on a recap on what happened.